Hello, everybody, and thank you for joining us for this week's Trade the Chain AMA. It is September 28th, and I am joined by our Director of Research, Nick Happy Man Mancini, Doug Grumpy Old Man. Wait, why do you have Nick on your name, Doug?
I'm not sure.
That's fine. Oh, because he joined with my panelist link, I think.
With this link,
Oh,
yeah.
we have Doug, aka Nick DeRosa, and apparently we have okay, this is going to be a fun episode. We have Josh Frank, the co-founder and CEO of The Tie, who's the beloved guest every week on this show. Thank you guys all for tuning in. I want everybody to remember that a couple different things. One is if you go to the tradethechain.com website and you are not a member, we have a free daily newsletter that you could sign up for. It's absolutely free. Monday, we have in-depth analysis and commentary from Nick, and we have daily, just daily macro coverage of news and listings and delistings from exchanges, with the exception of then we hit Thursday, and we have our Coins on the Move newsletter, which is both Monday and Thursday are some of the most actionable items you can get. Powerful, and they're 100% free to you. Also, another thing we've done is we have made a 2-week trial period. So you can sign up for Trade the Chain, and I know this goes on YouTube after we do the members only, but if you are not a member, sign up for Trade the Chain. You're going to get 2 weeks free, no commitments, like us or leave us, okay? I'll trust you that you're going to like us because our Discord is awesome and we're in there every day. Members in the TTC team are 100% accessible all the time. We take this journey with you, folks. So that being said, I'm going to hand it over to Nick, who's going to give you some highlights of what the market's doing. Also, you got to watch his daily show too every midday, Monday through Friday.
Yeah, so was just on CoinDesk TV discussing some of this information, but basically the gist is, at least on short-term outlook for how I'm assessing the market, is we just got hit with a pretty bang, series of bearish news. Most recently, most notably as well, is the UK bond issuance, which sent things, in an entirely, negative direction yesterday and Monday. And the interesting thing is that crypto has held up its low. So if you actually, and I'll share this in the Trade the Chain. Actually, I already did share this in the Trade the Chain community earlier. So if you scroll up slightly to the morning, you'll see the equities versus Bitcoin correlation. And equities have been making lower lows. Crypto, at least for the month of September, crypto has been making higher highs, or at least equal lows. So interestingly enough, as equities grow weaker, crypto has, I wouldn't call it has grown stronger, but has grown more resilient. And if you take a step back and look at it from the 30K foot view, crypto is down 70, 80, 90% in some areas. Equities are only down 20 to 30%. So if equities and crypto are more or less correlated, crypto, most of the risk associated with the most riskiest asset classes has more or less flushed away. I mean, certainly you can still go down 100% from whatever price you're at, but a lot of the nastiness, a lot of the downside risk has already been removed from the market. If equities and crypto continue correlation, and equities actually find some sort of footing at current level, which if they have a strong daily close, which currently looks likely, is plausible, that could spell some short-term bullishness going into October. Now I'm hearing people start to say Uptember, all sorts of fun stuff about, bullish month in October. I'm not ready to say that yet. Obviously any number of black swans and red herrings, wait for us in relation to Russia, Europe, Asia, China especially. So, nothing is 100% in the clear, but it does look like we're good to go for potentially some bullishness heading into early October. And then I would expect, just based on historical references, that, we would see some sort of flush in the first couple of weeks of October. That would then be really the kind of the nastiness of what we'll see in Q4. And then I'm hopeful, not ready to confirm this entire thesis and make bets on it this early, but I'm hopeful after an early October flush that we end up seeing some bullishness heading into Q4 as we get that typical holiday rally as spending increases, consumer confidence increases, and things of that nature. So the things we have to look out for, obviously, the bad news is good news narrative. So if more houses are being sold, if unemployment's not rising, if inflation is not abating, then that will likely push the market lower because the Fed is going to have to tighten more. But given the scenario with the Bank of England, they've just begun, what you would consider as quantitative easing, or the opposite of quantitative tightening. So now the narrative is, if Bank of England is on this trajectory, when will Europe meet them? When will Asia meet them? When will the US meet them? That's kind of the outlook here for potential bullishness heading into Q4 and potentially early 2023, because QE is typically when you go risk on, and QT is when you go risk off. So, there's still many things to assess here, but preliminarily, if equities do not confirm new lows and end up rising from here, I think the crypto will do the same, considering it's a high beta asset class compared to equities, meaning 1% move in equities could be 4, 5, 6, 7, 8% for Bitcoin, Ethereum, and other assets. And then as long as we get more clarity on the inflation situation, as well as whether or not more central banks continue QE, those will be I believe, our catalysts for either more bearishness or more bullishness, provided the current narrative ends up breaking down.
And I just want to give everybody a quick view into what we're looking at when Nick mentions he puts his thing into Discord. Here you have, he puts down charts. He's dropping nuggets throughout the day. This is the type of stuff that goes into our community, and this is what our members pay attention with and discuss with us as we go through trades. So we also have channels. We have 3 main channels when it comes to research, and that's going to be the technical analysis channel, the fundamental analysis channel, and the sentiment analysis channel. And that's where our trade ideas and our investment ideas are born from. Before I go to Doug, I do want to bring it up because I am the Shilly Maze of the group. Don't forget to join us for Twitter Spaces tomorrow, our Trading Places Twitter Spaces at 4:30 Eastern Time, because we have a great guest on tomorrow. Our good friend John Najarian from CNBC and co-founder of Market Rebellion. We're going to be discussing many different topics, but from an overview, it's going to be trading in a down market, and that's going to have to do with options, equities, crypto, and the like. So definitely join us, John Najarian, Trading Spaces tomorrow on our Twitter Spaces. So Nick, aka Doug DeRosa, what do you have for us as far as a couple things? I know you're going to do some coins on the move and stuff that we've put out, but from a short macroeconomic synopsis, what is your thought process? You are the everyday guy.
Well, like Nick said, markets need a catalyst, which is what we're going to go into when we discuss coins on the move. You obviously need some type of actionable event. And today that may be been an actionable event with the Bank of England coming in and essentially bailing out one of the biggest economies in the world. I think it's the 5th biggest global economy. So we'll see if that abates. The tide here, where equities was certainly having a big downdraft that could have pulled crypto down. Interestingly, with the 10-year bond moving back today in such a pretty pronounced move, we actually dropped almost 0.25%. That brings the 30-year mortgage now back under 7%. I don't think that's going to make anybody go out and buy a house right now, but at least we hit that 7% psychological barrier. And I think people were like, oh crap, are we moving to 8? I mean, obviously refinances have totally dried up. Those have been crushed right now. So we'll see going now into the fall, if things can kind of subside here, especially with this BOE move, move today. But right now, this trend is still down. Obviously, the trend is still down for cryptos and equity. So, like Nick said, we need to really see if we could form a bottom here, and I think the follow through really will be big. Obviously, in the next 2 weeks, as we're going into October, which is seasonably never a good month for equities, at least. So,
all right, let's move on. Coins on the move. What do we got?
Yeah, so Alex, every week we focus on 2 coins that we think might be of interest to our readers, might have, again, like I said, some type of underlying catalyst. We look for, conferences, events, maybe some type of interesting technology, maybe some integrations, partnerships, things would spark a coin. So for instance, we've had success with Near Protocol. They were having their Near conference earlier this month. Back in February when they had East Denver, they came out with a product called Pagoda, which essentially was a new platform for Web3 dApps. And that spurred some interest in the coin and made it appreciate. We have the Cosmoverse, the Atom coin, and that conference is actually, I think, today and tomorrow in Spain, I believe it was, or I think it was in Spain. And so, again, that's something that could be an underlying catalyst. We had picked out Chili's because obviously we felt there was a catalyst going into the fall with the World Cup and obviously English Premier League that would make things appreciate. Coming out tomorrow, we're going to have StormX and Uniswap. I think each one might be interesting. StormX, you're now going into the holiday shopping season. They are the premier company for crypto cashback rewards. So just from a high level, that makes sense, right? If you're going to do any shopping online, you may want to do StormX and obviously pick up some cryptocurrency. They just added Doge. For some reason, people call that dog coin. I don't know why people on the street say that, but maybe they're just not smart. Yeah. Yeah. And then Uni just had an interesting comment. Their COO, I don't know if that was at a conference recently, but she had commented they have a new offering coming out called Uniswap Diamond, which essentially they are going to become more like a CeFi offering. Actually, they're trying to poach obviously order flow from CeFi exchanges. And so they want to integrate more trading features, charts, almost like a professional trading platform. So we'll see if that creates some catalyst, obviously, in Uni. But yeah, that's what we do at Coins of the Move. We come out with that every week on Thursday. And again, look for something that will create a little bit of a buzz and spark to make these coins appreciate.
Yeah, I mean, in regards to StormX, an interesting thing happening with StormX, they have a governance vote going on, I believe, in about 24 hours, which has been a little controversial to some. But, you know, and controversial in the fact that they're adding token supply, right? Now, Simon, you, a friend of the show, friend Trade Chain over there, CEO, founder of StormX, what he's proposing is correct. And I think rightfully so amongst the complaints. I think because we're in a down market, people are taking it too harshly. And so it's interesting to see how both protocols and companies move in a down market where things may not be appreciated, even though they're correct, as they would be when everybody's mooning, you know, and flying high. So,
well, that's the neat thing about governance in this ecosystem, right? Is that the community has a say and has a vote. So, you know, StormX went to their community and said, hey, if you're going to shop online through these awesome retailers that we have, Walmart, Macy's, you know, what would you like to receive back next that we don't offer? And so they voted on Doge, they voted it over Cardano. And again, that's the beauty of cryptocurrency, especially when you have the governance utility, right? That people can have a say in a matter. Whereas you and I and other companies, you just kind of take what they give you, right? So
yeah, absolutely. All right, great stuff. Thanks, Doug. Moving over to Josh, I think we have a question from the audience, which is, who painted the green wall behind you?
DoorDash, who was here before us. So it's awful. It looks like I'm in a prison. Like, look at this.
It's so horrible, man.
It's so unbelievably bad. I told my team we need to repaint it. It's like really bad. And like this spotlight, like, look, it looks like I'm getting a mugshot over here. Like,
it's a halo effect.
it's really bad. It's really bad.
Have you tried using it as a green screen though?
I have not. I'm not that. I don't know how to do that. That's like way beyond my pay grade. And the funny thing is, like, the rest of the office is so nice too. Like, I can loop this around. It's like we got like a really nice office, and then like.
Oh my gosh, you still have the DoorDash logos in the frosting.
Why would I take that off? That's the best part. It's actually in the lease. So we took over the lease, and I said in the lease to the building, you cannot get rid of the DoorDash logos. I like them. I think they're funny. So.
That's hilarious. All right, what great nuggets of news do you have for us now? What's your insight? Everybody comes here just to listen to you anyway.
Oh, that's all I had was the wall. No, so I mean, we've been looking at some pretty cool data. One of the cool data points that we've been looking at is usage on chain, right? We talk a lot about fundamentals in crypto, and we talk about, all these different ideas. But at the end of the day, I think when it comes down to fundamentals, the thing that we should be looking at is anybody using this stuff? If they're using this stuff, how well are they being retained? How many fees are they paying? How long are they interacting with the chain? And so you guys are going to see some pretty cool data that I've literally never shared publicly before. This is stuff that we're still testing internally, so it's still early. But I wanted to look at a big project, and let's start with Uni V3 and see how well Uni is doing in terms of retention of users. And something that was pretty incredible. Blue is active users, red is new users. I mean, it is really taken a hard fall off the cliff. And that's not just the case for Uni V3, it's also the case for Uni V2, though to a lesser extent, and some other platforms where really the number of users is going down. But then you ask yourself, really, how well are these platforms actually retaining their users? And if we look at this, I mean, this is shocking. Only 6.86% of all people that interacted with Uniswap V3 smart contract in August of last year, in last month, actually came back in September. So only 7% of the user base actually came back month over month and interacted again. And we can look for comparison, like Uni V2 is pretty high relative. It's about 19%. But if we think about traditional SaaS products, right, or traditional software businesses, if you're only retaining 19% of your users month over month, it's not a very good sign. And it's not. This is not me calling it Uniswap, because this is the case for basically everything in crypto. So it was just the first thing that came up. But then the question you go and you ask yourself is, well, if people are leaving Uniswap V3, where are they going? And what we've been noticing is that the majority of users leaving Uni V3 are moving to 1inch, which is quite cool. And so then I started to ask myself, all right, 1inch is starting to get the users that are churning and no longer using Uni V3. How well is 1inch retaining their users? And so diving in here, what we see is 1inch users have actually been growing, which has been pretty interesting. And if we look at retention rate on 1inch users at the bottom left here, 1inch is retaining their users at about 30%. So it's about 5x the retention rate of Uni V3 and about 50% higher than Uni V2. So pretty interesting to look at and to see. Obviously, it's not quite as many users as Uniswap V2, but it is a lot of users, and there are a large number of new users coming in. So a lot of people are clearly moving. And keep in mind, we don't track everything yet. This is still a work in progress, and it's still early. But a lot of people moving from the DEXs themselves to routers, which is quite an interesting phenomenon to watch. And then, I asked myself, okay, people are moving from Uniswap to 1inch. Has that been reflected in price? And what I'm looking at here is 1inch's price return versus Uniswap on every different time frame. And on every single time frame, 1inch is outperforming Uniswap. So even though users are leaving Uniswap to go to 1inch, even though 1inch is growing and it's retaining users at a higher level, it's actually underperforming Uniswap. I don't give investment advice, but theoretically, if one platform is retaining more users than another platform, if users are leaving one platform to go to that other platform at its highest numbers, I think that's pretty interesting. I think it's an interesting trend. 1inch is still a pretty small asset. Its circulating market cap's about $344 million. But it's something that I'm, looking out for. I mean, it not only has it underperformed Uniswap, it's actually underperformed DeFi, and from DEX aggregator perspective, I mean, over the last year, it's actually underperformed all DEX aggregators by about 46%. So something interesting. Curious if you guys have any thoughts on that.
Yeah, and this is a metric that everybody's wondered about, and it comes into fundamental analysis. Are you of the belief that user retention growth is directly correlated to the price? I mean, is that?
I don't think it is at all, because I don't think anybody's looking at it yet, and I think it's incredibly important that people start looking at it. That data doesn't really exist, right? No one really has it other than us. I mean, we just built it, so. I think it's really important, right? Like when you're thinking about investing in a company, right? Let's say you were considering investing in, I don't know, let's take, the NBA versus the NFL as examples. And if the NBA, if 50% of people that went to NBA games came and went to a second game, but only 10% of people that came to an NFL game came to another game, you'd say, all right, the NBA is better at retaining users. It looks like potentially in that regard, a better investment opportunity. And as I think, as we start to look at tokens, we need to be very critical about, are people actually using these smart contracts? Are they being retained? Are they churning? And we can start to look at some really cool stuff. So let me load up one more thing here that we can look at as well. But yeah, please.
And while you do that, I mean, you're talking about $356 million market cap on the 1-inch token, which in comparison to what they are is kind of low. I mean, if that token has any sort of good utility to it, that token could be an undervalued gem.
Yeah, I think there's two pieces of this equation, though, right? There is does anybody using it? Are they being retained? Is the number of users growing? How wealthy are the users? But also, this is the piece that we're trying to answer now, which I think is a very relevant and related point. It's what are the fees paid? How do those fees accrue to the token holders, and how valuable are those users? So I think there's really two sides to this equation.
Yeah.
Is anybody engaging with it? Are they retaining their users? If they're not retaining their users, I think it's also really important to note, like, for example, if Uni wasn't retaining its users, but neither was any of the DEXs or any of the AMMs, it wouldn't really be so much of a problem. What I think you have to understand is, are they going to another solution, and how big is the addressable market, right? Like, is there only 10,000 unique wallets active in DeFi on a given day? If that's the case, the total addressable market isn't very big, right? So I think we need to start looking at digital assets in more of a like practical, fundamental driven approach. Like, I think there's really two things that we should be looking at. It's those fundamentals of retention, of fees, but also the point of trade the chain is sentiment, because that's a massive part of it, right? I mean, I think it actually shows the fact that this isn't priced in. It actually shows how important sentiment is in thinking about price movement, because in an asset class where fundamentals aren't priced in, what is priced in is sentiment and how excited people are about these projects. Because if a lot more people are talking about, and I could pull that data up right now, like Uniswap versus like, 1-inch as an example. So yeah, I mean, this is a perfect example of that, right? So check this out. So, we can obviously pull this data up on Trade the Chain. I just have this up right now, but, Uniswap has over the last 30 days, an average of 8,281 tweets versus 378 for 1-inch, right? So really prime example of the fact that, even though people are, even though usage may start to look similar and come together, at the end of the day, right? There's 20 plus times more conversation about Uniswap, and Uniswap from a market cap perspective. We said 1-inch was like, I think 400 million in terms of the circulating market cap versus 5 billion for Uniswap. So it's about 10 times the.
And that's crazy. So you have this young company, or a smaller company than Uniswap, retaining 3x more customers on a retention basis, has a total market cap of, I don't even know what the equivalent is.
Or whatever the size, yeah.
Yeah, 356 million to 5 billion. And the tweets are so far heavyweighted to Uniswap, yet they're losing customers at a 3 times greater rate in retention.
Yeah.
See, and that's what drives sentiment. When people put this together, I think this is huge. I mean, honestly, I kind of want to be off the record on this. I might get a little 1-inch position going.
Josh, I have a question.
Wait until we have more data, more assets to show you. We've only tested 10 assets so far. So 1-inch looks better than Uniswap as an example, but we could come out of the blue and something could look even better than that, right? So.
But you're right, though, because the aggregator, or in TradFi, known as the broker model, is way more popular than the single. You look at, I think the growth of even CeFi is going to go to the broker model over the exchange model, and the exchanges are going to become like ECN outposts, like a Virtu. Okay. I think that is what is going to gain popularity in DeFi. People want best price, best fill mechanisms, which 1-inch has in its matching engine technology, right? So I think you're onto something. I think the stats are showing it.
Yeah, I mean, I would add one caveat, which is that we're not tracking specifically all of the 1-inch orders that got routed to Uniswap. But what I care about more is, are people directly interacting with Uniswap? I think that's a better gauge, because at the end of the day, if you're moving from like a DEX to a DEX aggregator, doesn't matter what the underlying DEX is, because at the end of the day, it's going to go search for the best price, right? And so
You know, Josh is always that guy who knocks over the punch bowl at a good party, right? Jesus, there's always a caveat.
I guess I'll throw out coins on the move for this week. So let's delete that. But with that said, Josh, I do have a question. One of the things I wrote about is that Uni tries to be, fully decentralized in a way. And so not that they don't vet any listings, but they don't vet any listings. Do you think that attrition is because they did list a bunch of projects that were like Enu and whatnot, and people lost money and they just got frustrated with the, what's
Well,
that?
I think
The DeFi, they have no control. You're not, the whole point is the lack of
Right, that's
censorship.
what I'm saying. That's what I'm saying. It's totally, there's no
I think-
intermediaries. So do
I
people
think
got,
it may be, if I had to guess, that more active, sophisticated traders are moving to DEX aggregators versus Uniswap. People transacting directly on Uniswap may be lower because a lot of those were folks trying to buy these shit coins that, like a lot of these centralized retail exchanges, or there's just a lot less volume than there was previously. So that would be my guess and my take. Look, that doesn't mean that Uniswap volume is down tremendously, but I think it's important to look at where the attention and where the users are going to.
Agreed. All right. Do you want to pull up like 3-4 news stories for us for Shotgun?
Let's do it.
All
My
right.
first news story, without even looking at it, my first news story is Mashinsky stepping down. It's not a news story. I mean, it's just it's a thing.
It is a news story. I mean, I think I heard cheers out the window when I was on my balcony when that became announced.
It's like it's the fall of crypto resignations. We got Mashinsky resigning. We got Jesse Powell. I'm not putting Jesse Powell and Brett Harrison in the same bucket as Mashinsky. So just to be very clear, but we had a Mashinsky resignation. We had Jesse Powell, the CEO of Kraken, resign. Brett Harrison, the CEO of FTX US, resign. I don't know if I have a
Genesis. I mean, the list goes on and on and on. It is ridiculous how this happened. And I think it was Nick who brought this up in our daily show, where we went through, Nick, am I correct that where we went through the last cycle of crypto CEOs resigning and the market lost X amount of percent?
Yeah, it was pre-COVID. It was like we heard all the news stories. I think it was like November to January when the whispers first started, and then a bunch of CEOs resigned from mainly Web2 companies, but a lot of also Web2 tech, consumer discretionary, medical, etc. Market drop, what, 50%? That was not 50, well, maybe not 50. I don't remember exactly what the COVID drop was, but 30, 40, 50, somewhere around there. So it's interesting. I mean, you mentioned earlier today that we may be seeing the inverse in relation to crypto. I did see a really good thread about this in relation to the fact that it kind of a new paradigm is coming. Like a lot of the early crypto CEOs, built on the 80-20 of, pushing products and innovation and not dealing with a lot of regulatory stuff because it was gray area and they left out of the lawyers. But now once if we want to get past 1 trillion into 2, 3, 5, 10 trillion, it's going to take a very intelligent type of CEO and board of governors to take you to that level, especially with the lack of clarity, the fact that regulation is going to come. It's very similar in early tech companies. I think Facebook is probably one outliers, but most tech companies early on, the founders stepped aside to take a COO role or a board role or something like that, and a new CEO comes in and does all of the rigmarole that you need to, kind of create this fully fledged multinational market-leading company. This happens quite often in many industries. So, I don't consider it nearly a bad thing, but just given the most recent precedent and the fact that there's 1,000,001 calls for 12K, 15K Bitcoin, et cetera, definitely cause for concern. But I do agree that it could be an inverse due to how far off the highs we are, and the fact that these people, this new leadership is most definitely being brought in to scale, to implement good regulatory clarity, or take whatever regulatory clarity we get and figure it out. So I think long term it's definitely a good sign, but it's definitely a paradigm shift in the crypto market itself, and signs of maturity.
Yeah.
Definitely.
All right, Josh.
Other thing, we got a lot of Chainlink announcements. Chainlink partners with Swift for cross-chain protocol and TradFi play from CoinDesk. We got Avalanche partners with Link to bring Link to Avalanche. And then we have a couple other secondary announcements on Chainlink around a Coinbase Cloud partnership for NFT floor pricing. And the interesting thing is, as I go into these announcements, is that price has not responded at all to those announcements. And here, for example, is this announcement of the Coinbase Cloud partnership. You know, blue is the news story, this vertical line. The blue line that's moving is price. Announcement happened, price did not respond. And you know, that goes with a lot of these announcements on Swift partnership, you know, negligible.
What's interesting is, first of all, I've mentioned this for quite some time now in Trade the Chain, is Chainlink has never been able to get their price to pump, right? It's never had that that big catalyst upward.
It did not the last cycle, but it did the cycle before.
No, I'm talking about this cycle, the last 3 years. It's really a
I don't
relatively
think it's a
stable thing.
Chainlink specific issue. I think it's an Oracle specific issue.
Well, that's the thing. I think it's an Oracle specific issue. Now, what's interesting, what happened to Avalanche's price at the same time that news announcement happened?
I can tell you right now. Give me a second. Avalanche's price with the Chainlink announcement.
Nothing. Nobody cares.
Nothing.
Nobody cares.
I am trying to pull up some data though on like how have let's look at like the last year. I'm looking at I'm trying to pull up a chart on the return of oracles versus like DeFi, for example. Oh, what's going on? We're going a little crazy here. This is the last 6 months. They've actually performed pretty similarly. I wonder if we throw like NFT marketplaces in here, and NFT, I mean, totally outperformed. But oracles and DeFi are down here. These NFTs at the top. What if we zoom out a year here? Let's pull NFTs off. Whoops. Yeah, I mean, oracles are not doing well. They're even underperforming DeFi, which is underperforming. So
yeah,
I mean, if you look at Chainlink specifically against other oracles, it's pretty much the same. They're all performing in the same direction, which is a downwards one. The other, so 3 news stories you told me. So let me get you a third news story, which is Fed's Powell, DeFi needs appropriate regulation before talking about regulation. I'm done with this shit.
I hate regulation. That didn't come out right, but you know what I mean.
I know. I can't listen to it. I like this one. BitDeer sets up $250 million fund to acquire assets from financially distressed Bitcoin miners. I love special situations funds. I love the idea of coming in and buying distressed assets. I spoke to one of the 10 largest hedge funds in the world. They are privately setting up a fund that's investing in distressed crypto assets, which means distressed tokens, and also things like distressed miners and mining companies and buying equipment and things like that. I think at the end of the day, be greedy when others are fearful. And I think right now, a lot of people are in fear, and folks that are going to come in are going to be able to do really well, swoop in, buy assets at the low. Obviously, we saw that with Voyager and FTX. Obviously, that's a little bit of a different situation, and that's a very distressed asset. But I think that
it's a huge opportunity for special situations right now. That could make somebody a good business.
Mining, yeah.
Yeah,
mining is a great opportunity for special situations. If you're able to go, for anyone who doesn't know, special situations is basically when there's a distressed opportunity or when an asset or a company is struggling in the market, going out and being aggressive and buying it. So an example of a special situation, which you guys can do, GBTC is trading at a 35% discount to the price of Bitcoin. Right. So there are funds that are going out there and they're buying a ton of GBTC because the idea is if an ETF ever gets approved, right, that you're going to make 35% on the money, right? And that doesn't necessarily mean that you should go out and borrow Bitcoin or like, you know, or like try to hedge your GBTC with Bitcoin or whatever. But, you know, if you're trying to get exposure to Bitcoin at a lower price, a special situations approach, maybe to buy GBTC to get it at a discount, right? I'm not advocating for that. This is not investment advice, right? But that's just an example of how one could do it. And how you guys.
Josh has showed a couple things today.
I'm not a holder of GBTC. No, I have no financial stake in its success, though I know a lot of funds that would appreciate if you purchased their bags because they.
I want to close out our remarks with this. The other day, Saylor publicly put out that, listen, Bitcoin is going to go to 100,000 within 4 years. Now, what I found interesting about that prediction, we haven't heard many of them in the last year, is the fact that you go back to 2021, particularly in the springtime, and you had people that were putting out predictions, even people like Guggenheim and things like that. They'd say, oh, it's going to be $240,000 in 8 months. All of a sudden, our time horizon has now gone, yeah, it's going to be 100,000 in, I don't know, 4 years, 5 years, some point in this decade, who knows? Is that a sign of these guys getting deal fatigue?
No one who's ever made a price prediction has looked good.
No one's ever made a price prediction that was correct.
Yeah.
So, all right, folks, we're going to end it right here. Thank you for joining.
Can I show one thing?
Oh, shoot. Okay.
My team just wrote a 45-page quarterly report on crypto.
We're disseminating it. We're putting it out to all the Trade the Chain members.
Oh, amazing. Okay, well, all subscribe to Trade the Chain. That's all I got to say.
Listen, that hit my inbox today and it made for some good bathroom reading. I really enjoy when the TIE puts out their stuff. They're a smart team. I mean, seriously, a wealth of knowledge. They're on point. They put a lot of time and effort into what they talk about. So we appreciate them as a partner and always have a good time. Folks, I want to, again, remind you, tomorrow, 4:30 Eastern time, we'll be on with John Najarian on Trade the Chain's Twitter Spaces. Catch us there, participate, ask questions, and then don't forget to go over to tradethechain.com. If you don't get our newsletter, it's free, and we have some great commentary as well. I mean, nothing like the TIE puts out, but if you're a Trade the Chain member, you're going to get the TIE's quarterly report of the markets delivered straight to you. So with that being said, Nick Mancini, our Director of Research, the other Nick DeRosa down there in the corner, who's our everyday guy, and Josh, co-founder and CEO of the TIE. So thank you, folks, and we'll see you next Wednesday on our AMA.